Okay, very good morning. Thursday is 7th of June. Hope you are well. Going to have a quick review of the markets and kind of a positive risk on tone this morning. We'll have a look at an update on some of the trade talk ahead of the G7 starting tomorrow in Quebec, Canada. And then we'll have a look at Brexit, some rumours about the potential resignation of David Davis circulating last night. And then we will have a look at the calendar and the apologies for the coffee machine, people getting their morning fix at the moment, as you can imagine, for the busy day ahead. But having a look then, positive sentiment seen across the board, and US equities again just continuing to just kind of find a platform, push higher. It's kind of that's what we were talking about yesterday. It's been a really persistent pattern. Ever since that payroll number came out, we've kind of just gone higher, consolidated pretty much usually during the Asian session, and then just kind of moved higher again. And then this last push this morning, and it just continues. And, you know, obviously there's quite a few interesting articles. I tweeted one this morning, you know, more people looking at the kind of technology names, which, if you remember, it was only, I mean, we're only talking about possibly 7-8 weeks ago when the technology sector had a real wobble. People started questioning the overvalued nature of that sector. The kind of, we were looking yesterday at some of the technicals from the RSI's point of view, whether it's overbought, but you know, people are still kind of more fixated on the underlying kind of micro fundamentals, if you like, emanating from that article we were discussing yesterday from Goldman's, talking about, you know, they're reasonably priced and it's based on strong fundamentals, and we just continue to move higher. And interestingly, we managed to break above the kind of highs that were seen yesterday morning in the late part of the afternoon. And during when we left the market yesterday, US equities just really took off on the upside, and they continue to do so for the time being. And just looking on a slightly bigger, broader range here, this was the chart that I put out at the beginning of the week when we issued the weekly strategy on Monday. And I was kind of looking at this key area of consolidation, and we were coming kind of to the top of that, kind of wedged in a little bit to a potential kind of breakout if then the trade talks weren't going to impact in a negative way. And despite what we're going to discuss in a second, it's looking like there's going to be some confrontation for sure coming up between the likes of Macron and Merkel challenging the US in that G7 summit. The market's kind of fairly comfortable with the situation, and that it will be resolved in a more, I guess, peaceful manner. Kudlow last night, I'm sure you picked up, he's kind of putting it as equivalent as a family quarrel, and that it can, and he thinks, be resolved. So upside then, having broken out of this kind of relative period of resistance throughout really much of the month of May, we've really broken out of that, and those levels we were eyeing up back at the beginning of the week are now very quickly coming into sight. So you've got that 27.87, and then obviously the handle is a big one, just given some of this, again, the shakeout that came after that February-inspired kind of wage improvement, which saw the policy tightening fears emerge. So they're kind of two levels that I'd keep an eye on through today and the rest of this week. And it's just been quite a nice clear upside run, just given really there isn't a lot technically to hold back the price action. There's probably also helped the case for this S&P rise. Looking elsewhere in sympathy, the DAX obviously on the front foot this morning. European equities opening in a positive fashion following that overall performance that was seen on Wall Street and subsequently in the Asia Pac session. Just looking at the DAX here, quite an interesting level coming up as upside resistance. You can see here, this would have been Tuesday's high. So just short of that at the moment. Here we are trading here on the right hand side at around 12,905. But that level is pretty big, just for the reasons being, if we start looking back through May, that really was a pretty decent area of support for a good 2-week period in the middle of May. And so as we creep back up to that point, the market did find some resistance as the weekly high for the DAX. And so I'll be looking at that level with some keen interest today. If we can maintain this positive kind of equity sentiment and we get a breach of that it could act then as a bit of a launch pad, or at least a support point for a potential classic long. We've obviously got the R1 and 2 above, probably looking broader targets, that R2 kind of around those levels. We've got the 13,000 psychologically as well, so I'm keeping an eye here, just given the close proximity of that technical point at the moment. Otherwise, elsewhere, you can see the dollar's weaker. We are down about 1/3 of 1%. Just a quick look at the euro-dollar pair, and that really continues to soar in the wake of this. If you remember, we've kind of had this hawkish spin from ECB officials. I can't remember how many spoke yesterday. It must have been at least 4. And they were all exactly on the same page, talking about this discussion about the end of QE needs to start happening and so on and so forth. And the euro's really caught hold of that new kind of spin, if you like, just given the fact that they've now gone into their blackout period. So for the upcoming ECB meeting, this is certainly going to be something we're looking for now. So more specific clarity on the timing as to that program, how and when is it going to end. Looking at the euro a bit more longer time frame, again, this is a chart from the strategy report on Monday, and we were kind of looking at these 2 rectangles at the time as kind of upside weekly targets, and we've already just smashed through that. You can see the real trigger point of this recent rise that we've had, which is kind of this elevation in price action, has come post this hawkish commentary. It started off with that Bloomberg source report about the next meeting being a live one for the debate on the ending of QE, and that was then backed up by those several officials, and so we've just continued to punch higher. Looking on the upside, then the next kind of level here that I'd be interested in is kind of looking up at that point. If I can just adjust my chart, let me just change the axis here. So that 118.47 is probably, if we continue this trend, what I'd be looking at is kind of this area here, and so targeting here with some significance to see as potential resistance. We're about 12 pips shy of that at the moment, so anyone who has been in that long throughout early hours of this morning, I'd be looking to probably come out of that position at around that point, if not just coming out at least as some of the position size. But certainly, if you look at where we were with that euro move, when we went through this period of a pretty persistent trend from mid-May, then we, of course, in the middle of this, we had this complete Italian shakeout. I mean, it's almost like Italy's just gone forgotten, at least for the time being. I mean, the yields have certainly been reflecting this in the local market, as well as the sentiment recovery in the equity market. And then if you look at the euro, where we've added already a decent portion of gains beyond that full reversal, which really happened. It only took about 2 days to reverse that entire Italian sell-off. And so, this is how these market kind of macro themes can quite quickly come and pass in a pretty fast fashion. So, yeah, I think it looks pretty bullish still for the fundamentals, certainly for the euro. The ECB tightening with the potential risk about a flare-up in trade talks, which I think would be more detrimental to dollar, should keep things buoyant in that pair. And then just having a look at the pound. Well, firstly, let's just check out some of the news. This is something that you've probably read this morning. UK's Theresa May, the PM, faces showdown with Mr. David Davis over the Irish border plan. And so where we're at the moment is that the Brexit secretary is apparently said to be furious over May's plan to tie the UK into the European Union's customs rules for an open-ended period. So if you remember, originally Theresa May had to do some working of the kind of the legal wording around this idea about a limited period to just facilitate the discussion to the next phase of Brexit talks about having a fixed period of the customs access to the customs union. But apparently now the fact that we've not in existing form stated when we're going to leave it, and that's what's disgruntled Mr. David Davis. He wants a definitive date set out as post then the elapse of Article 50 of when exactly this is going to happen. So happy to have a transitional deal, but it needs to be definitive that this is going to happen. We are going to leave, and this is the rock and a hard place essentially where we're at, where we have been for some months, is that this doesn't really resolve what exactly is going to happen with that Northern Ireland border. So the issue rapidly becoming toxic is what Bloomberg are reporting this morning. I think it comes as no surprise to see that Foreign Secretary Boris Johnson, Trade Secretary Liam Fox and the Environmental Minister Michael Gove are all on the same page as Mr. Davis. And so, this kind of pressure on Theresa May does seemingly seem to be mounting, but she has been pretty bulletproof so far. But if he were to leave, I think that would be quite interesting. And on that point, he said last night that it's up to the Prime Minister whether I stay or go. So it's not exactly the most convincing response I've ever heard to a journalist question. But he is the face of Brexit as far as Europe have been concerned with the discussions with Michel Barnier, as far as the public have been concerned. And if he was to go, I think could be a short-term negative at least. And would that kind of fire up the Brexiteers within the Tory party even further for a push on then their lack of confidence in the Prime Minister to deliver what they want. So the pound's not really reacting to this morning. Such is Brexit news at the moment. It's almost like we've priced in a messy, complicated political situation. But certainly this does warrant monitoring. The headline risk, I'd say, probably then for today and tomorrow is going to be, well, what if David Davis resigns? I guess the question then is, how's the pound going to react to that? I'd say probably your initial reaction, at least in a fast money move, might be negative, just given it would add a degree of uncertainty, at least short term, that is, over what has been the lead person for the negotiation thus far. Just looking at the pound, we've already got above, so let me just switch my chart. We've got above the high that we printed from yesterday afternoon. So as I said, the dollar index is trading down about 1/3 so both euro dollar and cable are positive. So just having a look here at cable, let's broaden out the chart a little bit. We've kind of been, again, seeing a pretty decent rally in prices on this kind of trend line I was looking at this morning. We found that, I think that's level at 134 handle looks pretty good as if we did get any type of pullback as an area of strong support. Kind of here's where I'm looking at. But at the moment, if I go short term, then that 34.50 in the interim period, now that we've broken above that by a decent 15 pips, could act as a nice area if you were contemplating the kind of pullback to then reassert the long position. And then looking at cable here, the one thing though, you start looking on a broader context. Okay, how far can this run go for the time being? And if I just remove this, it's where we are at the moment to give you a bit of an idea of the broader context. So that was that really key trend line from beginning of 2017 that we were looking at, and that lined up really nicely with that resistance point from the kind of summer high of last year, and then that breach that we got when the data was weakening in the UK. But I think people have repriced now their perception about future monetary policy from the Bank of England, having kind of pulled back those expectations of any immediate type rate hike. We seem to have found a bit of a floor on the recovery for the moment. So next port of call, you've kind of got the 135 handle looming just above. Maybe then looking at around that early December high above there. But as I said, kind of the same situation. I'd say maybe not as bullish on the upside as it would be for euro dollar, but if we get persistent dollar weakness, then that could help that move play out. But again, there is some degree, I'd say, of potential headline noise that could create some quite quick, fast type price reaction for the reasons just discussed. Quickly then, just on the other kind of main talking point for the morning, this is just looking at the G7, because all the ministers now start arriving in Quebec, and it's just talking about Macron, Merkel, looking at potentially challenging Donald Trump, and that France have stated that they'll join Germany and will not sign a joint statement of the Group of Seven without major concessions from the US. And this is talking about the areas of a couple things: trade, tariffs, Iran, climate accord, so on and so forth. So still a lot to play for the rest of the week. And so far, so good, actually, in terms of market sentiment. The question is, can this be sustained? And also, the one thing, although, yes, I do think this equity market, as we were discussing yesterday, we had a little bit of profit taking, but my view does remain the same for today, it's about any type of profit taking. Well, where's the next reasonable point to join going long again? We had that exactly yesterday. We were looking at those levels. The market was looking a little heavy after that extended move, the records in various different US indices. It did pull back. We saw around the open a bit more of a violent move when the market dipped below those previous points of resistance, resistance that was seen back earlier in the week. It dipped down to what was its respective pivot, which was also the highs from the beginning on Monday of this week, before then just launching higher. So again, I think the market feels quite positive to take this move further, but you just got to be careful you don't get caught at the top of the move when it's looking fairly exhausted. What I'd be looking for then are concerted pullbacks to then re-enter the market long, with the prospect then that over the course of possibly even a session that we continue to move higher. One other thing quickly just to finish off is oil. I know quite a few of you actually traded oil yesterday, and with some, or not, I shouldn't say some, with some great success. I know Hilton did, Michael did, Max did, so well done to all those guys. And obviously this is kind of your situation where you use the API oil inventories the night before as your reference point for how the market is positioned, what it's expected, and then you get the complete opposite, which was a real bearish outcome, a build in the headline. It's kind of like a 4 million swing, if you like, from what the API said. That with US output up again, I think it's 10.8 million barrels per day now, up about 0.3%. Just saw a market shoot lower, and we were looking at these. The key here is about the timings of the exit for any of those types of trades. So what we were looking at, and I was kind of talking one of the new traders through this, because he was in the short. His assumption was, well, fundamentally this should push the market lower, which is absolutely correct. But then it was about, well, when to get out of the market, because as you know, with the oil inventory data, the market moves very quickly. And so really this is when you do your kind of prior planning of the technical levels. So if you kind of remove this price action that we had over the overnight session, and so it was kind of these areas which were kind of here, which was that first, well, if I just change these to rectangles so you can make a bit more sense of this. So it's kind of here and here were key. So when we were in that short on the break of the low from earlier, that was kind of the sweet spot to get some of the trade off. And then second point being then the logical kind of speculative targets would be the previous day's low. And you can see everyone kind of eyeing up that level. And as soon as it hits close proximity to it, market just quite violently bounces back up. So, I mean, the trade took about, I think it was about 20 minutes or so for its entirety of the move. But a really good exercise, and I think in execution of how to trade that type of event, and it was quite pleasing to see some of you do that. Again, for the newer traders, this is, trading oil inventory numbers is something I think better left to when you get more experienced. But with trading this kind of event, when you know it's going to spark some activity, it's all in the preparation about identifying key levels of where, in both bearish and bullish scenarios, you think the market in fast money type moves is going to look to get out and then actioning it accordingly. So yeah, good to see that yesterday. In terms of oil and where we sit at the moment, I've read a couple things this morning, and just given this kind of depreciation of the price of oil, I mean, it's been rapid, hasn't it? Since mid-May, we've fallen from the 73 handle. We're $10 lower. I guess the one thing that OPEC, non-OPEC and so on is like, fine, they've kind of talked about they don't want oil to continue running higher, but quite likewise they don't want it to continue falling at the pace it has done. And it does feel like we've got to the lower bound of this recent move now. It's almost like we've repriced in this thinking that potentially we're going to have a million type extension to the supply deal come the 22nd of June. Key levels then to look out for on the day is going to be that kind of double bottom, if you like, from the last two sessions. If we were to get back down to that lower point, that also, as you can see there, is the S1 on the day. So this is going to be quite key. If we breach that, we might get an extension, push on to 64 and beyond. But if all things remain equal as they are now, I actually think that the price is going to consolidate probably within this area of really the upper bound here and the lower bound of price action here. All right, quick look at the calendar and then we'll finish things up. So here we are. This is the calendar for today, and as you can see, there is not a great deal going on. In fact, hardly anything of interest, I'd say, that the market's going to really latch onto for direction. So I think it's still kind of monitoring overall sentiment derived from some of the ongoing trade talks. Keep an eye out for any continuation of dollar weakness in tandem with this kind of renewed outlook for the euro on a more hawkish ECB. Potential any rumours about David Davis and the uncertainty that could play out negatively for the pound in very short term, at least for cable on Brexit. And then speakers wise, again, pretty quiet. You've got Bank of England's Ramsden, who's one of the most dovish members, speaking at 4 p.m. And then for any fixed income traders in the Bund, you've got quite a lot of supply coming out of Spain and France. Might act as a bit of a weight for bunds in early trade with that additional supply hitting the market. The only data we've had this morning of any significance has been German factory orders, but German factory orders, I know it's the main kind of biggest economy within Europe, and you would think this would be important, but the German factory orders does tend to be pretty volatile, and the market's kind of looking beyond this at the moment. It was actually a fairly weak number, as you can see, the weakest we printed since the beginning of the year. But it has had no real meaningful impact on the market, despite it being quite a bit weaker than market expectations. So it's just been brushed aside for the time being. Okay, that's it. So going to wish you a good day. I'll see you in the chat room. Thank you very much.